Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Some headlines already coming out today, including social media posts from President Trump, who said he would speak with Chinese leader Xi Jinping on Friday. All this following talks between negotiators that resulted in a framework deal to keep ByteDance's TikTok app running in the U.S. So where is this all-important trade and geopolitical relationship really? We're going to head to the Bloomberg Washington, D.C. News Bureau and bring in White House reporter Skylar Woodhouse, who joins us from there. Skylar, where is the U.S. and China in these talks? What's the status as it stands right now?
Yeah, Tim, I think what we're seeing right now, this is just sort of the next step in sort of the China-U.S. saga around their talks, from everything from tariffs to obviously what we're seeing with TikTok. And with TikTok, this is something, that President Trump has talked about for quite some time now, and it's something he definitely wants to see come together. During the campaign, he talked about how with younger voters on TikTok, it sort of helped amplify his momentum. So, he would like to see this deal come together. And as we look forward to September to October next month, with the two leaders potentially heading to the APEC summit. I think we'll have to see if this deal ultimately comes together. But one thing we did not quite hear from today with the talk was we saw the movement around TikTok, but we're still looking to see what those details might be.
Yeah, devil in the details. But maybe everybody has always said to us, U.S. and China, complicated, right? So none of this stuff happens easily. And so it's going to be a lot of talks before we start to get kind of the final terms, if you will. So is it progressing? Can we say it's progressing?
I think when you think of the Trump administration, there's usually a lot of meetings, a lot of conversations that are being had. I think it's fair to say things are moving forward and moving in the right step. But I think anytime when talking about the Trump administration, you always have to sort of err on a side of caution, just because things can change so quickly. Something could change at this very second. You just never know. So even though things appear to be moving forward, still always proceed with a little bit of caution there.
One thing that Carol and I have talked about quite a bit, Skylar, is just the question of TikTok and why that seems like such an important issue, or why it is such an important issue. We understand the huge user base, certainly. We understand the power that the app has. But when you think about it from the perspective of Washington, D.C., and maybe from the perspective of China using this as a bargaining chip, what is that context?
No, absolutely. I mentioned this about, President Trump is, you could say he's a fan of the app in terms of how, the engagement is with younger voters. But then separately, I think it ties into what the president has sort of been trying to do during his second term, which is sort of, establish the U.S. And basically, if he's able to get the U.S. more involved in TikTok and have it be less, Chinese owned, that's a win for him, especially given how massive the TikTok platform is. If he's able to basically say that, TikTok in the U.S. are more aligned than TikTok in China, the president might see that as a win in U.S. dominance.
Hey, one thing I, though, want to get to, and I think Tim mentioned it, China ruled that, or maybe anyway, it's part of the backdrop.
We've been talking about it.
We have been. China ruled that NVIDIA violated anti-monopoly laws with a high-profile 2020 deal. So that is seen as ratcheting up the pressure on D.C. during these sensitive trade negotiations, Skylar. Is China just negotiating, showing leverage? I know TikTok's important. NVIDIA is really important, certainly to the United States and AI. So I'm just trying to put that piece into the puzzle and how it explains what's going on here between U.S. and China.
No, absolutely, Carol. I think it's very interesting to sort of take a step back and just sort of lay out that, it's interesting that the agreement sort of came while the U.S. and China were meeting in Madrid. So I think that just sort of highlights the importance there. It's still, to be seen on if, this is China using this as leverage, but it definitely could impact tariff talks. So, we heard from Jameson Greer earlier today in Madrid saying, that, a potential extension could come in November. But still a lot going on in this space, especially around AI and chips and all that stuff. So it will be interesting to see sort of what this this investigation and how it wraps into everything going forward.
And how it wraps into what's expected is a chat between President Trump and President Xi on Friday. All right, we're going to leave it there. Skylar, thanks so much. Skylar Woodhouse, she is Bloomberg, Washington, D.C. News Bureau White House reporter, joining us there from the nation's capital.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Bill Dudley, former New York Fed president and Bloomberg opinion columnist, discussed the outlook for this week's Fed policy decision and the future path of interest rates.
Right along with everybody else, I expect a quarter-point cut. It's baked in the cake. I'd be surprised if they do anything else. There'll be guidance because they're going to publish the summary of economic projections, which shows their interest rate outlook for the rest of the year and into 2026 and 2027. And I think the big debate there is, do they show one more cut after September, or do they show two more cuts? And I think it's going to be a very close call between those two outcomes. I'm actually expecting very few dissents on the side of no rate cuts, maybe 0 or 1. The other side of the equation is, are we going to get 50 people supporting a 50 basis point rate cut? And I think the only person I'm expecting there perhaps is Steve Moran, if he gets confirmed and is sitting on the FOMC on Wednesday afternoon.
There you have it. Former New York Fed President Bill Dudley, who was a Bloomberg opinion columnist earlier today on Bloomberg Surveillance on Bloomberg Television. Carol, we had a great guest with a view on this week's Fed decision.
We do indeed. Great to have with us a former Bloomberg colleague, now senior U.S. economist for the Conference Board, Yelena Shulyatyeva, joining us from Long Island. Yelena, so good to have you back here with us. Do you agree with former New York Fed President Bill Dudley?
Well, on certain points, yes. And I guess everybody seems to agree that we're going to have a 25 basis point cut tomorrow. So I guess the most exciting thing to watch will be to see who's going to be at the meeting and not what they do, right?
Yeah.
I think, in terms of dissents, we actually could see a little bit more of difference in opinions. And, if Stephen Myron is going to participate in the meeting, he may actually dissent on the dovish side in favor of cutting rates even more than 25 basis points. Or we could see a hawkish dissent. That is quite possible. I think, the previous summary of economic projections showed 3.5% forecast for core PCE this year. So if some of these participants still think that inflation is going to rise as much, they may also dissent on the hawkish side. So it will be definitely a very interesting meeting, and we will see how many cuts they will price in. I totally agree with Bill Dudley that is probably going to be the most interesting thing, to see how many cuts are in the dot plot.
Well, let's take a step back and just want to get from you your view of the U.S. economy right now. Carol and I have spent quite a bit of time over the last few weeks talking about the tension between the Fed's dual mandates when it comes to stable prices and maximum employment, given the cracks that are starting to show in the labor market. What do you think is more important for the Fed to focus on at tomorrow's meeting and then toward the end of the year?
Totally. I think that's exactly the thing that we are watching. So now the mandate is pretty tricky to follow, right? So there are the two goals are in conflict, and we actually think that inflation will rise. We think that inflation will rise above 3% in terms of PCE towards the end of the year due to tariffs. But we also see a significant slowdown in economic growth. The economy has already slowed quite significantly. In the first half of the year, growth really fell below 2% if you average it up Q1 and Q2. So don't be fooled by 3.3% GDP growth in the second quarter. So it's due to gyrations in imports ahead of tariffs. So, and we do see that the economy will slow further in the second half of the year, below 1%, quite frankly. So we spend quite a lot of time. Yeah.
So, Yelena, stagflation or recession, or how are you potentially seeing it?
these words are very dramatic. We don't, expect either. So stagflation is really inflation getting out of hand and inflation expectations getting out of hand. We don't project that. So we do see a pickup in inflation and slowdown in economic growth, but not to such a degree that also we forecast a recession. No, we do think that there will be a significant slowdown, but growth will probably remain positive. And that will be very tricky to read in economic data.
One of the things I'm just curious is President Donald Trump, even today, predicted a big cut from the Federal Reserve this week ahead of the meeting. And we know he has been, for a while, since he really came into the White House for this second term, talking a lot about the Fed, the composition of the Fed, what Jay Powell should be doing. Is that input from the president? How is it maybe impacting, or maybe more so politicizing, the U.S. central bank? I know we can say they're not going to be political, but it's hard to kind of ignore all of that's been said and the pressure and possibly the changing in the composition as a result of President Trump.
Well, it's a very good point, Carol. And, obviously we all watching what is happening with the Fed and how it affects Fed independence. I think the Fed and each and every participant in that meeting will actually try to make as much effort as they possibly can to really address this in a very nonpartisan, non-political way. Looking at the data, looking at the same data we'll all look at, and just come up with the best possible projection and solution for how they see the economy will evolve. And we have to listen to them and really believe that's what's happening. I think, yes, the recent news are very important because they draw attention to what is happening with the Fed. But what's happening inside of the Fed and at that meeting will be solely focused on the economy. That's what I truly think.
Yelena, just 20 seconds. What would change your view on saying that the U.S. is not necessarily at risk of negative growth in the near future?
Consumers, keep spending, and that's really an upside risk to the economy. Yeah. But unfortunately, I think that consumers, kind of like spending here and there, but they're getting tired of all this high prices.
All I'm going to say is my daughter, who, she's been a consumer for a long time, but now that she's starting to have her own job and her own place and do her own consuming, is just like, why is everything so expensive, Mom? And I'm like, you don't
have to cut her off, Carol. You don't have to.
There is a point.
You don't have to.
Love her incredibly.
She's the bank of mom and dad. It's not. It doesn't have to close.
Are they never cut? I mean, my dad was giving me gas money until I was beyond than I should have. Yelena, thank you so much. Yelena Shulyatyeva, Senior US Economist for the Conference Board.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Tesla shares earlier in the session up as much as 7.5%, giving back some of those gains, up 3.3% right now. Still good enough, Carol, for a gainer for you.
Yeah, absolutely.
If you want.
It's on my list.
Okay, good.
It's on my list.
Well, the reason why we're watching it and talking about it, investors are buying it, is because Elon Musk responded to an unprecedented pay proposal from Tesla's board by buying about $1 billion worth of shares.
It's a lot of shares.
Is it a lot for Elon, though?
I don't know. Probably not if you're going to have $1 trillion pay package.
We'll pose the question to Max Chafkin. He's Bloomberg Businessweek senior reporter. He is co-host of the Everybody's at Business podcast. He's the author of The Contrarian, Peter Thiel in Silicon Valley's Pursuit of Power. He does it all. He joins us in the Bloomberg Interactive Brokers studio. $1 billion, is that a lot for Elon?
I haven't looked at how much his net worth has moved. I'm not sure if our Bloomberg billionaires list has updated it yet, but it will go up because Tesla's stock has gone up in response to this buy. So maybe it ends up paying for itself. Essentially,
I'm just imagining a snake eating its own tail with like how this works.
There's a little bit of that with Elon Musk. I mean, he's the
wealthiest person in the world. The index has not been updated today, but as of the last update, $418.6 billion is his net worth.
Yeah, I mean, the stock it operates, although Tesla has this very large, very good business in selling cars, the Tesla stock kind of operates a little bit like a meme stock. It moves around a lot, 5% gain, which is where we were earlier in the day, I guess even a little higher, maybe 7%. Mm-hmm. That's a big move for most companies. It's not the biggest move in the world for Tesla, where you often see these wild swings, and often the wild swings are really just about things that Elon Musk has said. If he gets on Twitter and says something really positive about self-driving cars or about the Optimus robot, that can sometimes be enough, because you have retail traders. Remember, this is a company with a very large retail shareholder base. They respond to that. And what we've seen over the last week, not just this purchase of shares on the open market, which is a big deal. I mean, $1 billion is $1 billion. That's no joke, especially given that Elon Musk has spent a lot of time over the last couple of years essentially borrowing against Twitter and buying other things and doing, spending time in Washington and buying X and so on. So refocusing on Tesla, shareholders are going to like that. And the other thing that I think these kind of retail investors who really like Elon Musk care about is this pay package. It simultaneously, from their point of view, ensures that Elon Musk is going to be locked up at this company for a long time. It also kind of creates a goal that is really audacious, and that's something that can maybe help justify the valuation being where it is, which is, it's very, if you compare it to like other car companies, Tesla, has a much greater valuation. So maybe
it's a different planet. But people would say it's a different animal. It's not a car company.
But anyway, this maybe would go some way towards justifying that valuation, or even growing it further, because it includes huge sales goals for Tesla's automotive business, which has been stagnating, of course, over the last year or so, as well as goals around self-driving cars, as well as Optimus and so on. If he really were to get there, I think most investors would say, yeah, it's worth the potential $1 trillion that we have agreed to pay him.
I mean, it's a company with a $1.3 trillion market cap and expected revenues. The latest number, the annual figure, we're talking about maybe $93 billion. So, price to sales. I don't know. I just kind of think about it. I mean, I get the connection. I mean, Tesla without an Elon is not going to be Tesla, right?
It is. That's true. And I think, and that is what's so interesting about what's been happening since the beginning of the Trump presidency, and maybe even a little bit before that, where you have, on one hand, you could make a really strong argument that some of Elon Musk's actions in Washington, or his, the things he's putting on his X page, the kind of associations with various polarizing figures, which we even saw over the weekend, this rally in the UK, that is hurting the company's business. On the other hand, if you were to remove Elon Musk, if the board were to say, that's it, we've had enough Elon Musk, we need to replace you, that would instantly, I think most people believe, most investors, including bulls and bears, the stock would fall, because this company is really a bet on this one guy, warts and all.
Well, warts and all. Yet we always talk about SpaceX having leaders, right, that are really key in what that company does. Yet the visionary, is it safe to say, Max, is really Elon? Or is it a group of people that are the visionaries?
I think Tesla and SpaceX are really two different animals, because, as you said, SpaceX has this kind of deputy in Gwen Shotwell, is the president of the company, who has relationships with important customers, especially government customers, and a business that is just sort of more stable in terms of selling launches to the U.S. government. We've talked a lot on this show and elsewhere, of course, about how dominant SpaceX's position in the launch market. Tesla's a little bit different, right? There are lots of car makers who are bringing out really good electric cars right now. There are Chinese companies with great autonomous vehicle packages. So there's real competition, and we've seen, sales go all over the place. And yet there is this kind of crazy out there vision of Tesla as a massive robotics company. And so it's just much more, I think, a speculative bet than SpaceX is for the investors who are putting money into this thing.
And look, SpaceX still a private company. We don't know what's going to happen. Maybe they spin off Starlink. Who knows? We'll have to stay tuned to see what happens there. But Max, when it comes to SpaceX and Tesla and Elon Musk's pay package as it relates to Tesla, is it a loss for SpaceX? You said Gwen Shotwell's, really the glue that holds it together, but Elon is the one who wants to colonize Mars.
Well, if you watch the interview or listen to the interview that Bloomberg did last week with Tesla's chair, Robin Denholm, you heard her say that they're fine with him working at other companies. There's nothing in this pay package saying you need to spend more time at Tesla relative to SpaceX than you were before.
To reach the benchmarks that would pay him $1 trillion or achieve that $1 trillion payday, one would imagine that he would have to spend more time.
It really just doesn't sound like that's the plan. I mean, the plan seems to be they're going to stick with what they're doing, which is develop, at least that's the story they're telling. I agree with you. And I think if you talk to bears, especially, they're going to say, look, this plan, these goals are out of this world. They're crazy. It's going to be very, very hard for this to happen without some crazy things happening, but probably both internally and externally. The Elon position, the Tesla position is things are growing great. We're transitioning rapidly to autonomous cars. And before you know it, the robot future, there's not only at least in my reading of this pay package, no requirement that he spends less time at these other companies. There's really nothing stopping him from his kind of political activity, at least as a poster. There is this line about winding down his activities, but last week when asked about this, the Tesla chair essentially said, well, he's still allowed to do his personal activities. She wouldn't put any kind of defined, timeline or what it would mean. It really seems like he can continue, funding candidates, and serving as an advocate, because I think, at least my understanding based on that interview and in the proxy, those would consist of Elon Musk's kind of personal political activities. If he were to take another job in government, that seems less likely. But again, there's still a lot of room for him to kind of be an advocate and be vocal, be out there.
Is it odd that he bought these shares? Just got 25 seconds. Do you think that there was hey, we're working on this pay pack?
I think he's signaling to investors that he's committed, and that's how they're going to see it. I think he's attempting to, if you're cynical, you say maybe he's goosing the stock. If you're not cynical, you say he just believes in this thing. He believes the stock's undervalued, and he's committed, and that's what he's signaling. Like
the ultimate insider buying Tesla, right? It's a big sign of confidence. Stock still up about 3%. It was up earlier in the day, up 7.5%. Max Chafkin, Bloomberg Businessweek senior reporter. Thank you so much. This is Bloomberg.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
That's not all. We'll get to one more headline in just a second. I want to bring in Brent Schutte, Chief Investment Officer of Northwestern Mutual Wealth Management. The firm has more than $300 billion in assets under management. Brett, always good to chat with you. Where we want to start, Carol brought this up early this morning, as soon as this crossed. The president saying that companies should report earnings every 6 months. He called to an end to quarterly earnings reports, suggesting companies report on a 6-month basis. He said this change would save money and allow managers to focus on running their companies, but critics argue it would be a step backward and reduce transparency. How would you view something like this as somebody who has to make decisions about investing large sums of money?
For me, the more transparency, the better. And so I prefer having quite a bit of data to look over. And I think it's one of the reasons why the U.S. actually trades at a premium.
Hallelujah. I'm with you. Hallelujah. But keep going.
There's lots of reasons why the U.S. trades at a premium to foreign markets, but certainly our transparency here in the United States, I think helps that premium grow just a bit. And so that's one of the areas that I'd like to keep as much transparency as possible. That all being said, it's open for discussion. Certainly, I think about working for a company like the one I work for, where we are able to think longer term rather than quarterly, just because of how we're designed. And there are benefits to that too. But for me, the more the better, at least. And that's where I lean towards, albeit with a discussion that I'm willing to have on the other side of the equation.
Well, but I think you bring up an important point, and that's the difference in different structures. But it also has to do with shareholders. So if you're a shareholder of a publicly traded company, you're an owner in that company. If you work, let's say, for a private company, you don't necessarily need to be communicated with, because there aren't investors in private companies on a wide scale. Right. These are private companies or family owned companies, et cetera. So, there's a big difference there when it comes to structure.
Absolutely. And I guess I go back to the more transparency, the better. I mean, that's like saying we're going to limit the jobs report for 3 or 4 or 5 months. I'd prefer to see it every month. And so to me, it helps me make better decisions, I think. And certainly, I think, one thing investors need to learn to do is not overreact to each and every data point. But I'm still in favor of actually seeing that data. And like I said before, I think it's one of the reasons why just all the transparency, all the data in the U.S. that is trusted is the reason why U.S. stocks, at least one of them, trade at a premium relative to the rest of the world.
All right, so let's talk about that Fed decision that we get on Wednesday, Brent. How much of the expectations about what the Fed's going to do in September and perhaps in subsequent Fed meetings this year and maybe into 2026, how much of that is already baked into the equity trade?
I think quite a bit. I mean, to me, in this day and age, there seems to be a never-ending belief that the Federal Reserve can cut rates and magically save every economic cycle. And that's where, at least in the past, the timing is difficult. And this time, they're risking missing on both sides of their mandate. And so that's where there's quite a bit of tension that I really haven't seen as much in my 31 years of doing this now, to where you could paint a picture of a recession, although not many people are predicting one now, which is hard to believe given the fact that the jobs market has weakened as much as it had. You could paint me that realistic picture. On the opposite side, you could paint a picture of inflation continuing to move higher in the not too distant future. And that's where I think those two things haven't really been an issue for markets to have to contend with, or the Fed to have to contend with for the last 15 or 20 years, which makes it a very interesting Fed meeting. I think they'll cut 25 basis points, but I think they'll pull back a little bit on the narrative of promising anything for the future. And that's where I still think they're going to talk about being data dependent and the risk that inflation continues to move higher, because we really haven't tried this level of tariffs in about 80 some years. So we have to go back to 1935. And that's where I think economists on both sides of the equation, there are economists who think it's more of an inflation type of a reality. The other side thinks it's more of a slower growth. In the near term, we've gotten both of them. I guess it's still up for grabs what happens in the intermediate term, and that's where I think they'll leave the door open for flexibility in the future.
Could some of this be a little messy depending on the outcome of Fed Governor Lisa Cook, whether or not she's actually going to be involved in these meetings? And then we've got Stephen Myron, we are expecting some news today about Senate confirmation, so that he'll be at that meeting. And you do wonder if he's carrying water for the president, as he is the president's nomination to be on the Fed?
100%. I mean, this is where, I think you're Bloomberg, I think, actually brought it up that we might have the first dissent on both sides. And so there's certainly a divided Fed. I just think that shows you the time period we're in, where there's all kinds of change happening all at once. And I mentioned not seeing tariffs at, the 18% effective rate, which is what we're headed to since 1935. That's where I think, economists look at textbooks and they also look at history. And we don't have a long history of what actually happens, especially in an economy that's changed as much as it has since 1935. And I think you're going to see those divisions in the Fed in the meeting on Wednesday.
Why do you think we haven't seen inflation show up to the extent that many people 6 months ago thought it would as a result of these tariffs?
This is where I think the narrative is a little bit wrong. I hear in the narrative that inflation hasn't shown up yet. I think inflation is showing up again. It was coming down and now it's going back up. If you think about it, you had importers pull ahead imports. You had consumers pull ahead demand. You had companies build inventories in advance. And that's where the tariffs haven't been on all that long. And the effective tariff rate as of the end of July was 9.7%. And we're headed to somewhere around 18%. So I don't think we've seen the full impact yet. And I think the last few inflation reports have shown that tariffs are starting to show up. And that's where I imagine if you're a company kind of thinking about how dynamic the past 4 or 5 months have been, you don't want to raise prices prematurely if the tariffs don't survive or they don't last or something changes, because then you risk losing market share. And so you probably hold off as long as possible. When you combine that with the other things I've mentioned, that's where I think there's still probably more in front of us. And that's a risk the Fed has to navigate.
Feel like a reality check. Kind of loving this, Brent. What I want to ask you, we're talking with Brent Schutte, Chief Investment Officer of Northwestern Mutual Wealth Management firm, has over $300 billion in assets under management. Brent, just got about a minute left here. All right, so tie it all up. What do we do as investors here?
I hate to sound boring, but you stay diversified. You don't concentrate in any one part of the market, because concentration to me means that you think you know exactly what's going to happen. And I still think there's lots of uncertainties and there's different paths forward. So I think there are different outcomes that could occur because we are changing how the U.S. economy operates in regard to the rest of the world. And that brings about different risks, which I think you haven't really had to worry about the inflation risk if you're an investor since 05, 06, 07, beyond 2022. And that's where I just think you need to stay diversified. You need to make sure that you're not taking more risk than what is in your plan. And I do think there's opportunities in things where you need to think longer term. So I mentioned people not mentioning the word recession now, even though the labor market is pretty weak. I also hear people talking about valuation not being all that relevant anymore. This is where the market trades at 23 times, but there are plenty of markets that don't. I know it's a bad timing tool, but plant the seeds now that you'll be thankful for later in the future. And that's where I still think small and mid-cap stocks provide opportunities for longer-term investors. And I'd encourage you to kind of wrap that all into a whole portfolio.
Good stuff. Interesting. Brent, thank you so much. Brent Schutte, Chief Investment Officer of Northwestern Mutual Wealth Management. As we mentioned, $300 billion in assets under management, joining us from Milwaukee.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.